Hello and welcome to ET Interview. It gives me great pleasure to bring on board Mr. Ronojoy Dutta, CEO of IndiGo, to talk about the exciting quarter which has surprised every shareholder with a strong comeback and how things are essentially evolving for IndiGo and the Indian airspace now that Air India has been privatized. So discuss all that and much more. Let's connect with him. Mr. Dutta, good afternoon. Thank you for joining us. First
Good
things
afternoon,
first.
Nikunj. My pleasure.
First things first, on all key parameters, there was a huge uptick in your quarterly performance. Growth is back. Improvement is clearly visible. But is that here to stay?
I have to say, Nikunj, things are improving as we speak. They're improving rapidly, and they're improving faster than any of us had expected. It has been a very strong Diwali season. You're referring to our last quarter's performance, of course, being strong. But this quarter is also shaping up very well. And most importantly is the way that the revenue is coming back, that the traffic is coming back. Just to give you some broad parameters, as we speak domestically, our capacity now is higher than it was pre-COVID. Our load factors on certain days, and it's a volatile market, so yes, weekends are strong, Tuesday, Wednesdays a week. But over the weekends, we're getting 85% load factor. So yes, traffic is coming back quite rapidly. International continues to be a challenge. We have some good inroads into Dubai, Doha, places like that. Very eager for Saudi Arabia, Singapore, Thailand to open up. So international is the one thing that's going slower than expected. But again, I'm optimistic that things will turn around by December.
The current quarter, which is the last quarter of the calendar year, is always the peak quarter for the airline industry. You travel more, there is a holiday season. So, can I safely assume that trend which we just spoke about, the trend is only going to be moving upward?
Absolutely. I mean, clearly, this is going to be a good quarter for us. And you can see it in the traffic numbers that are being reported for the industry. I think everyone is doing well. Airports are busy. Airports, in fact, are congested. So the Indian consumer, as far as air travel is concerned,
The the chink in the armor, I won't say chink in the armor, but the crack here is that what's happened to crude prices. That accounts for nearly one third of the total cost for an airline industry. So one side, yes, the traffic is coming back, but all the traffic uptick is perhaps getting diluted by what you have to pay more for crude.
crude really is a problem. So a year ago, crude was roughly at about $45 a barrel. Today, it is around $82 a barrel. So crude, as you rightly point out, really has hurt us on the cost side. So we are looking at the trajectory, if you will, of losses. And we're not saying that, oh, we're getting into profits. We're just saying our losses are reducing fast. But we're still not looking for profits at this quarter or anything like that.
So can I safely interpret from your comment and your answer that yes, traffic is coming back, but at an operating level, unfortunately, because of high crude prices, you have not hit a break even?
That is absolutely correct. That is absolutely correct. That's a good summary.
Competition is going to be increasing, the landscape is going to be changing. Air India now has been acquired by Tatas. I know the standard answer of any CEO is that we welcome the competition, but competition is always good for the consumer and never good for the shareholders.
I wouldn't give you my standard answer. I'll give you more than the standard. And my answer is that I'm very happy that Air India got divested. I'm very happy that the Tata Group is picking them up because I think it is good for the country. It's good for the country to have a divestment like this work. It's good for the aviation sector, and it's good for Indigo. And why is it good for the aviation sector? India really is not carrying its traffic. And if you look at what's happening around India, the big hubs are, let's say, Dubai and Singapore. and they carry the traffic of the region. There's no reason why Delhi or Mumbai can't be a competitor to both Dubai and Singapore. But we can't do it alone. We, Indigo, as you know, are a narrow body operator. We are looking domestically, of course, that's a primary market. We're looking internationally at a 6 to 7 hour range. But what about the New Yorks and the US cities and Tokyo and so forth? We need a wide body operator, which Air India and Vistara is. And therefore, I think that's excellent to have this sort of complementary role where we do part of the world, they do part of the world. As you know, we are a low-cost carrier, they're a full-service carrier, so there's enough separation between us. At the same time, the bigger issue here is that 80% or 75 to 80% of costs for all airlines in India are in dollars. Why? Because we lease aircraft from outside in dollars, we pay for fuel. Importantly, we pay for maintenance costs in dollars. Now, having this ecosystem develop with two strong players, Indigo and Air India, with both of us growing, with both of us requiring maintenance work, both of us requiring aircraft leasing, I think the ecosystem becomes very stronger. And therefore, I say that this is also good for Indigo. So it's a win-win on all three counts. Good for the nation, good for aviation, good for Indigo.
But if I could just talk about the market share, what you have, the market share of 50% plus does give you a dominant edge. It is quality and it is size of operations which do kick in when it comes to managing a large fleet size like Indigo. Could there be a price war? Could there be disruption? Could there be, Tata's trying to come back and want to gain more market share, and that may hurt the incumbents? Do you see this kind of a price war in the skies?
No, because it's good to have healthy, economically responsible competitors. And I believe that is what the Tata Group will be. Comparatively, I wouldn't classify the old Air India as an economically responsible airline. We know that for years. They were funded by taxpayers. So obviously they were not pricing the product correctly. Therefore, I think this is good again from a pricing standpoint to have not airlines which are floundering, not sure where they're going, have a clear vision, have a clear cost structure, and then price responsibly. So I don't foresee any price wars. I see only responsible pricing.
Next question, not on behalf of a shareholder, but on behalf of a consumer.
Yes.
I wanted to travel on the long Diwali weekend and I had to shell out in 5 digit for an air ticket to Delhi to Mumbai.
Yes.
Do you think air prices today are a function of high fuel prices and consumers are paying more, or this is pure demand which is coming back, which in a sense is giving pricing power back to airlines?
So let's talk of pricing of airlines in India. The first point is that Indian air ticket prices are the lowest in the world. Okay? They're the lowest in the world. We know the cost pressures we face, especially with ATF and high taxes and so forth. Yet, airfares in India are the lowest in the world. And not by a little bit, by a lot. Secondly, yes, prices are sometimes they're low, sometimes they're high. But as a consumer, if you are buying, I would say intelligently, if you're looking for a good deal, they're always there. You just have to plan your trip in advance and you will get a low price. Now, the fact is that if you're going to be at last minute purchaser, yes, you will pay a high price. And that's the way airline pricing works. But the overall point is, on any global comparison, Indian prices are the lowest in the world.
Right. Thank you for that detailed explanation. I'm sure viewers would love to understand that what's the right way to book the air tickets. But coming back to what your view on the seat capacity or seat addition for the aviation industry is. This is one sector where we've not seen a structural seat capacity addition in last 10 years. If at all, the number of seat availability has come down. For next couple of years, now that economy is opening up, corporate balance sheets are better, we've emerged on the right side of COVID as a country, do you see a structural uptick coming in seat capacity for the airline industry?
I'm curious to your point because I know the last 2 years have been a challenge. But before that, the capacity was growing and growing rapidly, and was one of the prime drivers of the capacity. Looking back at the year 18, the year 19, we added about 20% capacity a year. That's a lot of seats. And overall, the industry was also growing. Now, what has happened since is we've plateaued and declined and so forth. So going forward, what do we foresee for the next 2 years? I think we'll grow a little bit next year, and I'm talking calendar year 22. But by 23, 24, I expect us back on a 20% growth. So we need to pause a little here, repair our balance sheet, wait for the traffic to come back, make sure that we are having reasonable, good margins. But Indian aviation is just seeing the beginning of what I would say rapid growth. You can just see it all around you. People are traveling more, people are traveling longer distances, families are more dispersed all over the country, families are dispersed all over the globe. Indian businesses are doing business or transacting business all over the world. We have good, strong inbound tourism, whether it's for medical tourism or for education tourism. You can call it by any name, but there's a lot of interest in coming to India. And we don't have a good network and hub structure to serve all these people. So, of course, we're going to grow, and of course, we'll do the right thing. And yes, I think the aviation industry is just in the beginning of rapid growth.
Mr. Datta, IndiGo has been a storm survivor, and I'm saying it literally because COVID was a tough and a very rough period for the airline industry, but IndiGo, because of the strength of its balance sheet, has emerged as a clear winner. So when you look at the COVID experience, the cost rationalization which you've taken, the kind of systems and technology processes which you've adopted, now that things are normalizing, what would be that real reboot at an operating level, which in a sense was, you were forced to adopt it, but that is something which becomes a permanent saving for you or a permanent process for you?
So when we got into COVID, no one knew how long it was going to last. And we were shut down, literally shut down. Yet we were all coming to work and like, okay, there are no planes flying. What do we do? And we said, let's spend the time, look every one of our processes, and make sure we come out of this crisis stronger than when we went in. And all the metrics says that's exactly what we've done. We are running a much better airline. As you know, we are now number 3 in the world in terms of punctuality. When it comes to customer complaints, when it comes to mishandled bags, we are one of the lowest in the world again. When it comes to digitization, when it comes to contactless travel, when it comes to process cost reduction, we've gone through all that through the last 18 years, and we've emerged stronger on every measure. In addition, we found new sources of revenue. The 2 most important ones being charter and cargo. So we were always a scheduled airline. And scheduled airlines work differently from charter operations. They have long lead times in terms of slots and crew rostering and all that. But we transformed ourselves overnight and said, let's become a charter operator. And the charter revenues have been so strong, we're like, okay, that's a new segment of revenue for us, which we never had before. Same thing exactly in cargo. So yes, we told ourselves let's emerge stronger. And I think we've emerged stronger in every measure that we put in place.
So whether it is charter or cargo, if I may use the terminology new businesses, how sizable would they be, and at what point in time the new businesses will be more than 10% of your revenue?
More than 10% of our revenue. Not too far off. So What did we do on cargo specifically? During COVID, we took 11 of our planes, which are passenger planes, and called them cargo in cabin. So the cargo was being carried inside the cabin with nets and so forth. Those 11 airplanes now we've reduced down to 3 as passenger demand is coming back. But most importantly, we've ordered 4 freighters, and they start coming in May. And the reason cargo is a good, again, a different business to be in, if you will, is because of the structural changes that have taken place in the cargo world. Cargo was mostly carried by wide body in the bellies. And now those wide bodies are not flying as much. That's one. The Indian government has made some regulatory changes when it comes to cargo. And on top of that, as you know, there's a lot of disruption in the shipping business and so forth. So all these factors are coming together and making cargo a very strong component of revenue. Specifically, we think our geography gives us a lot of advantage because there are countries around us which are actually export driven. The 2 examples being Bangladesh and Vietnam. And they used to rely on this wide body belly capacity to do the export business. And now they don't have it. So India does become a good transshipment point, which is why we are very bullish on the future of cargo.
Mr. Datta, the average crude cost for Indigo for the quarter gone by was about 73. For this quarter, crude has been stubbornly above $80 per barrel. So what is that sweet spot where crude has to come down and yields have to converge so that your cash burn actually is not happening?
Yes. So as you said, both need to happen. Now, as we put more capacity in the air, setting aside the crude costs, our costs do come down. They obviously spread over a bigger capacity. Secondly, remember that we are getting rid of all our old classic airplanes and replacing them with the new NEOs. And the NEOs burn 15% less fuel. So just if crude remains flat, or wherever it is at, just this substitution effect of fuel-efficient NEOs replacing classics reduces our fuel cost. On the revenue side, clearly we have to work on all fronts. International revenue actually is the strongest portion of our revenue. So international markets opening up is very important for us, and it hasn't happened yet. So when we say, okay, we are where we are, what do we see improving as we go forward? We see our revenue getting stronger with international opening. We see cargo remaining strong. Charters, we haven't talked about charters. Charters is a great source of new revenue for us. We see all those things happening. We see our costs going down to the spreading effect of more capacity. And then fuel will be what it will be. But overall, I think things are moving in the right direction, both on the revenue and the cost front.
But the fact that you've delayed your earlier plans to buy some more aircraft, was that largely because of pandemic and you went easy, and now that pandemic is behind us, at least in terms of life is normalizing, you may revisit your new aircraft purchase plans?
So we never did a wholesale postponement of any kind. As you know, we have steady delivery of airplanes. And on the delivery side, I would say we're still taking about 2 deliveries a month, or slightly higher actually. But we really ramp up with the 350 plane order, which starts at the end of 23, which is why I say, well, 22 will be sort of a plateau. We'll grow a little bit, but not much. Because as we're taking delivery of new airplanes, the NEOs, we're returning the old airplanes, the classic. So in a sense, there's a bit of a churn in the fleet without too much growth. But by the end of 23, we start growing.
So all your aircraft will be NEOs by end of next calendar year is what we understand. So, and we know that NEO, and like you mentioned, that is a far more efficient engine. It will lead to significant amount of cost saving. Could you walk us through that? How will this get reflected in terms of your margins? What happens once your complete fleet becomes the new fleet, the new fleet?
Well, margins, there's too much going on, right? What is happening to revenue, what is happening to yields. On the cost side, it's not just fuel, it's total capacity, it's employee costs, it's leasing costs. So a lot going on there. But just staying on fuel, fuel is 40% of our costs. And the NEOs, as I said, are 15% of 15% more fuel efficiency. Now, a lot of that has been recognized already, mind you, because we don't have that many classics left. We've got another 40, 50 classics left. So most of the benefits of the NEO are already there. We can make some more inroads as we go to 100% NEO.
So as we look into the future, Mr. Dutta, can I say you are excited, you're cautiously optimistic, or you are still nursing your wounds of the COVID impact?
All of the above. So let's take each one. Nursing our wounds, our balance sheet. Our balance sheet has been injured. It needs to be healed. So yes, we are nursing our wounds as far as the balance sheet is. Cautiously optimistic in the very near-term future. We are not back at profitability. There still could be a COVID. International hasn't opened up. So if you say for the next 8 to 12 months, cautiously optimistic. If you take the time horizon further out and you say 18 to 36 months, wildly bullish. Wildly bullish with what's happening in Indian aviation, wildly bullish with our geography, wildly believe with the structure of the world industry in aviation, how India is positioned. Remember, there have been two startling successes in the aviation industry in our backyard, if you will. One is Dubai, one is Singapore. I think we are about to see and witness a third startling success story, which will be Delhi and Mumbai.
Well, we look forward to that. And your last answer, in a sense, completely summarizes the short term, the medium term, and the long term outlook of IndiGo. And I always share this very proudly with our viewers that in last 10 years, out of the big companies which have really created a lot of shareholder value, one is Bajaj Finance, second is DMart, and the other one I would say IndiGo. So your shareholders, I'm sure, looking at the way you've come back and you've been a storm survivor, I'm sure they must be very happy and delighted. Really appreciate your time and hope to meet you in person once again very soon.
Thank you, Nikunj. Always a pleasure. Thank you very much.